name is Peter Hogendoorn. I've been in the venture capital business for about 30, 35 years, primarily in mining and technology. The last project I worked on was this particular project. The reason I was attracted to it was the strategic nature of potash as being a strategic resource. Not a lot of people think about it, and one of the things I liked about it was that there's not a lot of competition for shareholder interest, and I think shareholders are going to have the same kind of appeal to this because this is something they can understand and participate in a very simple and powerful story. But this is not a complicated story. We need food to eat, and one of the beauties of this company, why we started it, was that we're not one of 3,000 gold mining companies competing with each other to get investor attention. We're very niche-y, strategic, and I think once people understand that this is a mineral that's strategic, and people don't even think about it because it's not quoted in commodity markets, but yet we're affected by it every day. And we're affected by it with very little control. For the first time, through Sage, American farming can have some direct control over their own crop growth, and that's really the heart of this story. That's what attracted us to this deal 10 years ago, and that's why we're on it again, because that's what this is all about. It's about taking control of your own crop growth. You know, we're 15 years into this, essentially, even though we're a new company, but I was involved in drilling this hole 10 years ago. And, you know, now we're already at the point where we have a resource of 280 million tons, exceptional economic characteristics. You know, to find that generally takes a long time to put all that together. You know, we've got very high grade, so that's a known given. But when this deposit was initially mapped, it was mapped at a time when the technologies that would make this deposit mineable did not exist. So the only way you could mine potash years ago, until about 25 years ago, was you needed to have directional drilling, which is fairly new, and you needed solution mining that did not exist. So this deposit was known by the USGS for some time, but it needed the right technology and the right time. And we drilled this hole 10 years ago, and now we're already permitting. So for somebody else to get where we are from scratch would be a 10 or 15-year process.
Investors in Sage Potash have the opportunity to realize significant returns in the near term. With our expedited time to market and the ongoing trends in the potash market, we are poised to capture an immediate market share, delivering attractive returns to our investors. The last potash project takeout was about 15 years ago with Potash 1. And I think that was for close to $500 million, and that was a pre-production deposit. They were just a small fry in a very established potash producing market, and they still received a massive valuation. We're the only player in a massive market, and there's no producers right now per se. So the opportunity is exponentially larger than that opportunity was. The market is growing. The world population is growing. We've got areas of the planet that have been traditionally potassium deficient, have not been keeping up with the scientifically recommended potassium levels. That market is growing. We're seeing geopolitical risks with Russia and Belarus under sanctions with U.S. markets. So, we're looking at a very different market at this point that now has the added factor of national food security. So that's going to add to a valuation potential that didn't exist 10, 15 years ago. This is not a science project. All the technology we're using, all the vendors we're using it's known technology. So there's not a technology risk involved in this. It's not a science project. What we're really bringing to the table is creativity in scaling a production and you can do that with an advanced and high-grade deposit. Underground mining, you really can't even contemplate a project without considering billions of dollars, just for the infrastructure investment that has to be made before you're in production. Whereas with solution mining, we can be much more efficient with capital by starting off with smaller amounts and putting that into immediate production utilization. We're basically producing with smaller amounts of capital. So essentially, that enables us to de-risk the project at the front of the project as opposed to at the end of the project. By expanding on demand, that usually comes with almost a self-financing solution. So, once we're over a certain critical tipping point in terms of our project advancement, we shouldn't be looking at a lot of dilution like you do when you're talking about a $4 or $5 billion Greenfield project where there is, hundreds and hundreds of millions of dollars spent well in advance of going into production. And the risk is that subsequent rounds will always be dilutive, especially if your conditions are not lining up with your projections. A situation like we have, by producing in alignment with the capital that we have to use with, we're never kind of in a situation where we have runaway dilution. And at the end of the day, if we do it on demand, dilution should be minimized.